Happy Thursday, everybody. I do apologize for starting this live a little bit late. We are on today with Dan the Man from Holland Cash. And today we're going to be talking about maximizing your trucking business cash flow and why factoring beats QuickPay every time. We'll be right back after this. All right, we are back. So, in the fast-paced world of trucking, managing your cash flow efficiently is paramount to sustaining operations and driving growth. When it comes to optimizing cash flow, trucking companies often have to choose between two popular options, which is factoring and QuickPay, right? So, excuse me there 1 second. I'm messing with a setting here. So, wrong tab again. I'm having difficulties here today. Danny, why don't you go ahead, introduce yourself, tell us a little bit about what you do, and tell us about your channel, Holland Cash.
Yeah, so my name's Danny. I'm the business development manager at Operfi Factoring. I also run a kind of like an educational YouTube channel talking about day-to-day operations of businesses in transportation and logistics called Holland Cash. I came from the trucking space as a driver. I've been a business owner in that space as a transportation business owner. And then so I had a trucking business, and then I had a freight brokerage at one point, and some other businesses that assisted with that. And so basically worked my way up, man, from learning how to tarp, chain, drive a truck, navigate the roadway, to business funding, how to get funding, how to run a business, hiring drivers, firing drivers, pushing freight, moving freight. And then, so I ran a Holland Cash YouTube channel for a while, and then ended up taking time off the road, got away from all of it, actually went through Holland Cash and did a complete purge. So I removed away, like, I don't know how many videos I had in there, probably at that point, probably 100 plus videos were on there. And so we're revamping it now. We've kind of been doing some lives in between just to keep our channel alive for right now, because a lot of the content we're going to require editing and time to put together, and you want to put together, condensed version. So we're in the process of doing that. And that's kind of like just a personalized effort from myself to the community to give back to guys that may not know some of this information, and maybe they're trying to find answers, but nobody's shooting them straight. They kind of get like a, wrap around the rosy kind of thing, or they get, prompted to join somebody's $9 million an hour class that they're, some gurus selling them. And I just said, you know what, man, like, this information's public information. Anybody should be able to find this information, or should be able to have this information, and you shouldn't have to pay thousands of dollars to gain that information. And you shouldn't have to pay for a bunch of courses to try to figure life out. It's, when you're expending so much of your time, energy, effort, and money before you get started doing anything, it's really burdensome, and it gets hard on a lot of people. And it's like, look, man, if we can offer you a resource of information for you to assist yourself as you go along, some things may not be applicable to you today, but maybe they will be in the future. So it's always great to learn that stuff. And for me, I've been an avid student of my craft. I like to learn as much as I can. And I like to learn the things that could possibly get you in trouble or burn you going down the road. And I like to know that, because so many of us talk about the upside of trucking, the upside of logistics, the upside of the supply chain, and all the potential earnings you can have, which is really a salesy kind of attitude toward the industry. And it's a real glamorous, polished over, beautiful representation of all the romantic stuff. But there's really nobody talking to you about, hey, this is the nitty gritty. This is the shit that goes on every day. Or the stuff that goes on every day. This is the stuff that you're going to deal with on an hourly basis, on a weekly basis, quarterly basis. This is what happens. These are things that can go wrong. And these are some of the liabilities you could be facing, which I think of anything you're going to learn, you should learn that long before you open a business, so that you really understand the complexities of what it is you're stepping into before you sign your name on a dotted line and put yourself, in accountability mode with millions of dollars worth of equipment or freight or liabilities and damages and everything else that could go wrong. So it's, before you get yourself in a bind, it's like, let's just give you some information. So hopefully it's beneficial to folks. And that's really kind of what I'm doing as a side project, is just to put it out there, give people information that they can readily source and use as a backdrop to kind of frame their mindset towards something and take it from there.
Yeah, I love your videos. I really do. And I try to catch you whenever you put out a new one or when you go live. Yeah, I find them very informational, because I'm always learning something new, about financial factoring, all of that. I like to think of myself as at least semi-educated in that area, so every time you come on, it really kind of opens my eyes to everything that I don't know. So I'm always checking that out. And I would advise everybody to definitely check out Hall and Cash. Very educational, a lot of great information over there.
Right on.
So, yeah. So maybe for our viewers, can you explain the difference between QuickPay and factoring for trucking companies, and why they might prefer one over the other?
Yeah. So from a carrier perspective, we'll talk about from carrier and broker, right? So obviously a broker is not getting a QuickPay, but a broker offers QuickPay. And a broker is going to normally, brokers may or may not factor, but if they do, essentially what factoring is that you are selling your invoices to a factoring institution who purchases those invoices from you at a discounted rate and sits around and waits to essentially collect on that invoice, but then advances you the difference immediately. And so essentially, if you are in a cash intensive business, like the logistical supply chain metrics are on every scale to some degree, especially things like trucking, where you're actively spending money on fuel and repairs and tires and breakdowns and staff and all this other stuff, it can be very, very difficult to maintain a operational cash flow level while still waiting around to get paid on your invoices and your receivables. So, 30 days is really extensive when you consider every single truck is probably consuming $8,000 to $10,000 a month just in fuel. So if you have a multiple truck operation, you might be carrying hundreds of thousands of dollars in an account for an operational perspective of payroll and those sorts of things. And then you're still waiting on, maybe hundreds of thousands of dollars worth of invoices to make their way to your bank account, or to your inbox, or to your mailbox where you're going to go and cash that check. And so what factoring does is it steps in and it alleviates the time constraint. We take away the waiting period and we say, okay, listen, you're handing the invoices to us. We're going to front you the mass majority of the money what you're owed on this invoice. And for the nominal fee, we'll sit around and wait to collect on that, while you're funded, you're able to clear your head of that burden real quick and focus on the next load and keep the operation spinning without worrying that, are these checks going to come in? Are they going to hit the account? And then, so from factoring perspective, factoring does that. They buy the invoices. Where QuickPay comes in is QuickPay is essentially an offering from a brokerage to a carrier to get the same general parameters of early payment. And because you are requesting, it's more of an expedited payment. Because you're requesting an expedited payment, the relationship there, the difference is that the relationship with that broker and the carrier is essentially a direct relationship of debtor versus the actual trucking company. And so you have the actual person that owes the money, which is the broker in this situation, with the carrier, and they have a direct mutual relationship to pay the carrier in an expedited fashion. And for doing that, the carrier is willing to forego a certain amount of percentage of whatever the rate was to get their funds immediately. And so they're doing the same thing, but that relationship is more direct, one-on-one. And there's no real contractual agreements involved. Normally, if a factoring arrangement has a contractual obligation there. From a perspective with the broker on a QuickPay scenario, there's really not a contractual agreement per se for that transaction. And so it's kind of on the broker if they want to offer it. It's more of a voluntary thing if the broker elects to do it. And the rates based on, per broker could differ, slightly. So you might have a 2% with this broker over here, and you might have an 8% rate over here with this broker. So just depending on who you're working with, your cost may change. And then the other part of it being that when a factoring company is purchasing your invoices, they're issuing out a notice of assignment to that brokerage to let them know to redirect the funds over to the factoring company. The factoring company also has the ability to run credit checks on the brokers, on those debtors, on the customers. Whereas on a QuickPay scenario with a carrier, you might be requesting expedited pay, but you could be doing so from a broker that has no credit and no intention to pay you to begin with. And so you just have to, there's a little bit more risk involved there, where there isn't necessarily that much risk on the factoring side. So that's kind of what the two differences are. You're both getting an advance on your pay, but the relationship with the factor is going through a factor to do that on your behalf, to do the collection on your behalf. Whereas when you're getting a QuickPay situation, you're going directly to the debtor, to the broker, and they're paying you what they owe you at a discount because they're expediting their payment, if that makes sense.
Yeah, absolutely. Yeah, and it's we'd actually kind of touched on that a little bit right before we started the show, about that driver that I was talking to who was he'd been living off of QuickPay for the last little while, but now he's got himself stuck in a double brokering situation because he wasn't he wasn't checking the broker, and now he's got all these other invoices from other brokers, and he had requested QuickPay, but it's been over 30 days.
Yeah.
I don't know.
That's where factoring would have saved that guy probably a lot of time. And see, this is another big thing that happens a lot is you'll find a carrier who works with a factoring company and loves to factor things with them, except when the factoring company says, no, not that debtor. That debtor has a bad reputation. That debtor doesn't pay their bills. That debtor is not approved. And then the carrier says, well, to hell with that. I need a load. I've already talked to them. They're willing to give me a load. I'm willing to absolutely risk it and deal with them anyway. And then when they get in bed with these people who end up in a double brokering situation or are out there just intentionally scamming people, then they're left up the creek holding the bag going, what the hell happened? What went wrong? And everybody looking at them going, well, it's your fault. Like, you got yourself in this situation. You didn't bother listening to your factoring company. You didn't go through the credit check system they had for you. You ignored the red flag there. Then you went on and made a relationship with this broker. You probably got a really bad looking rate con and a bad looking broker carrier agreement that should have been a clear indication to anybody with experience that you shouldn't keep going. And yet you still kept going. And then you took the load, then you got screwed. And then now you're voicing your complaint and canarying from the sidelines saying how bad your day is. But you ignored like 17 red flags to get to where you are today. So it's like, there's a little give and there's a little take on there, and there's a little bit of empathy that people have for you, but not a whole lot, because in today's day where there's tech involved and people can dupe you and double broker you, there's also enough tech to combat that if you're willing to use that tech and actually take the steps necessary to do a due diligence of vetting the people you're working with. But what I've found is the lopsidedness with the vetting goes on where a broker might do his damnedest to vet the carrier. But the carrier doesn't seem to vet the broker very much. It doesn't seem like, they seem like, well, that's a broker, so it's automatically okay and it's a good deal. And it's like, not necessarily. And then we're also seeing a real big spike with carriers who are actually going after a broker, especially new brokerages, to dupe them and double broker them. So where you have a broker double brokering to a carrier, on a more experienced side, where those more experienced carriers are getting double brokered, you also have the inexperienced brokers getting double brokered by carefully laid out traps from the carrier side. And so they do bite each other. The fraud happens in both directions. But when you see a red flag, these should be like clear, like, hey, don't do that. And when you roll right on by those things, it's hard to have sympathy. So it's,
Well, and I think for a lot of carriers that kind of, like you said, bypass all these red flags that are slapping them in the face, essentially. Um, when they see a posted rate of $4,200 on a lane whose market average is $2,500, being that we've been in a 21-month slump, in the industry, I think that sort of supersedes their judgment, a little bit, because they're trying to make more money and get their bills paid and things, and it's unfortunate.
I think that's exactly correct. I think there's a lot of people that just see the dollar sign associated with something, with a load, and run with the presumption that life works like perfect and they're going to get paid this. It's almost like you can almost see them, the excitement with some of these guys on the phone when they lock a deal in, how excited they are to go pull that load because of how well it pays, without the foresight to say, hey, just because I haul this doesn't mean money comes into my account. There has to be other credentials that are met in order for this pay to actually reach me. And if I'm working with somebody that is completely fake, I'm going to do this for nothing. So no matter what this rate is on this load board, it means nothing if it doesn't actually pay. And that's where I try to stress, especially to the carrier side, like, look, man, just because you see the load pay $7,500 does not mean you're going to make $7,500, because if that person's fake and double brokering you, there's a likelihood that when you go and submit in a POD or in that bill of lading to that fake broker, that's the last you'll ever hear of it. And so, yeah, it's just trying to bake in that caution of like, hey man, take your time, vet the people. It's not a race. Like, I get you need to get on the live load board and a lot of people are calling for loads. I get it. But without doing your due diligence, you're setting yourself up for failure. And you're going to do it in a very expedited manner if all you want to do is be the next guy on the phone, get that call in, get that load, win that load. It's like, yeah, but you want a fake load. So it's like winning nothing anyway.
Right.
So we're trying to bake in a little caution and a little bit more tempered attitude toward booking your freight.
Yeah, I think sometimes I almost get a little preachy with carriers about things like this, or reading over their setup agreements with brokers, for instance. I can't tell you the number of emails, phone calls that I've gotten over the years where, hey, Tim, I've got a real problem. This broker's not going to pay me detention, or they're not going to pay me layover. Well, what does your agreement say with them? Well, I don't know.
Yeah.
And I go, well, how do you not know? You signed it, right? And so they pull it up and they go, I don't see anything in here for accessorials. There's no mention of, what they pay for detention and layover and things. And I go, well, then you're kind of at their mercy then, right? They might be collecting it from their customer, but they're under zero obligation to forward that to you.
No, yeah. Well, and there's a lot of, Tim, there's equally as many brokers coming into this industry that have no concept of what they're to do. And what's crazy is here's what I found. Every time I speak with brokers on the phone, there's an immediate, I know, yep, got it. Yep, I know. Whereas on the carrier side, there's a lot of like, I don't know. I'm not sure. I'm thinking about it. Let me see. I'll have to look. Like, from the carrier side, when I talk to a lot of carriers, there's a lot more openness about not knowing something. They're very open with learning something new, and they've been pretty open with, now granted, there are a sprinkling of your super experienced super truckers that have been everywhere since God was born, and they know the land inside and out, that kind of guy. But on the broker side, consistently, even with inexperienced brokers, I find a lot of them with the very salesy, confident mindset with things. And what they end up doing is they don't know what their agreement states. They've never heard of an MSA. They're not sure what a broker shipper agreement looks like. They're unsure of what the actual clauses in their agreements, what they mean. They don't know that quick paying a carrier doesn't benefit their credit in any way, shape, or form. They have no idea that the carrier just double brokered them. And so there's a lot of inexperience on both sides of the fence. And it's, especially as a factoring company, when I meet all these folks, I'm like disseminating that information down to them and then judging the responses I hear from people, because I have pointed questions for brokers and I have pointed questions for carriers. And some of the pointed questions I ask those brokers, I can, it immediately pulls off the cover and exposes the broker where they're at. And I'm like, okay, now that we know you're a year, new coming in, now that we've pulled the cover off this and exposed you for what this is, let's now talk about what we should do because you're at this level, not this level. And I do the same thing with carriers, but I think it's very important for people to be realistic with themselves and honest and just say, hey, I'm at this point where I don't know what I'm doing, or I'm not sure what my clause of my agreement says. And when you get to that point, if you don't know your contract that well, you should pause everything and not continue a day of operation until you know your own language inside and out, front and back, what your procedures are. And then from there, once you understand that, then move forward and actually operate. But yeah, to your point, I mean, it's both sides. It's both sides, but it's just on the broker side, it's a very confident side.
Right.
But
well, I think sometimes it's also like a false confidence, right? We were talking earlier about gurus, that sold them this course for $2,500 or $3,000, but it's so incomplete. Taught them how to go get their authority, the basic stuff, and then they're kind of like, okay, now what?
Right.
And again, I'll get these emails or phone calls, DMs on Facebook, things like that. And they go, Tim, I've been at this for 6 months and I don't have my first customer yet.
Yep.
And I said, well, what are you doing?
Right.
Why don't you have at least one customer in that period of time? Well, I don't know. So then we go through, the whole process of, okay, well, what are you doing? How many calls are you making? How many emails? How many follow-ups are you doing? How are you following up? And if your tactic isn't working, change it up, right? Maybe what you're doing isn't working. So look at something new. And while you get to a point where you start to look for quantity over quality, in the beginning, your job is just smiling and dialing, all day long. At least that's my belief, is what you should be doing. So when I hear, well, how many calls a day or a week are you making? Well, I probably made 11 calls yesterday. Well, when you think about the numbers and how many decision makers get those other calls, you're a drop, you're nothing to them. You've got to stay at it.
Well, and I think a lot of it too with the broker is, I'm a big fan of quality over quantity in a lot of cases. For me, it's if you're calling just to call for the sake of knocking out a call, then I think you shouldn't do it. If you're calling with an intent on, who the business is, what the layout is, the address, what they do, what they supply, have you done any research on the people you're getting ready to talk to? That will say a lot about you the moment you're on the phone, whether you are 100% engaged with this client, this prospective client for you or customer. Have you done enough research to know that, hey, man, in 2023, they had a killer year. They did this wonderful publication. They were involved in their community, or they moved this product. They do this. This is how many docks they have. This is what you can see from Google Earth. This looks like an easy entrance and exit for a truck. This seems to be, did Google Earth render you any kind of insight? Do you see trailers in the yard already? That will give you an indication of who you're getting ready to call. And then when you do call those folks, if you have that information already at least somewhat digested and you know who you're getting ready to speak to, it's a lot easier to have a conversation with somebody and come in and win their business when you actually care about their business. When you don't care, or when you're just calling just to essentially, turn your phone upside down and start screaming into the back end of it, hoping that somebody's going to listen to your terrible pitch you wrote up on freaking Chat GPT in 5 minutes. If that's all you're coming with, you're not going to win the deal. Like there's going to be somebody else that shows a little bit more dedication to service. And so I think a lot of things with brokers when they initially come in is they think it's $1 million deal. I'm going to make $1 million. I'm going to make $1 million. I'm a great salesperson. I can do all this. But what they don't realize, I find that that brokers that are inexperienced do the same thing that carriers who are inexperienced do, which is immediately start to go cutting the throat, cutting the rate. If you're like the sales tactic of reducing a rate, if that's your only sales tactic to get in the door, if that's the only overcoming of an objection you can possibly come up with is to reduce the rate, you're in the wrong business. Like that sales is not your deal, because reducing the rate and reducing your cost and reducing the operational, margin that's built in there is there for a reason. These margins are built for a reason. If you come in and you quote a margin at 10% on a margin, but it's a large number, you still are only making a 10% margin, and you have a lot more at risk that nothing changed because the rate went up or because the value went up or because the volume's up. It doesn't matter. There's still a level of service that has to be obtained and maintained throughout that relationship, which is going to cost money. So if you first come in and just immediately, well, the competition is moving this, and customers do this all the time. Yeah. Well, the guy I'm currently using is covering my lane at only $600 a move. So like you're coming in at $1,700, bud, I can't work with you. You have to know as a broker, do you pick shit flowers from the side of the street? Do you pick wildflowers that may grow? Do you have a basket of weeds, or do you have a basket of tulips? Are you going to work with your C, D, F rating customers, okay, who are probably subprime on every loan they've ever gotten, that don't do a whole lot of business, that probably have shady underworking deals, and they probably have to resort to prepaying all their loads? Or are you working with your more upper scale clientele that moves a particular product, that needs it moved a particular way, that's willing to pay a premium to do so, but expects you to bring in and deliver quality to them? What customer do you have? If you take a TQL approach, you might have them all. But if you're a smaller brokerage, you're only going to be able to fit into a certain window, and you need to figure out what that window is you would like to do. If you pick your cheaper customers, you're going to have a lot of complaints, because people that pay for really cheap service expect a whole lot too. For whatever reason, they think, well, I paid $12, I should get the world now. Whereas the customers that might pay a lot, they want that quality service because they know they're paying a lot. They're probably more educated about how they ship their product. They probably know how they want their product loaded. And so you might run in with a customer carrier disagreement there, whereas your cheaper client's probably going to give you a customer broker disagreement, and it's normally going to do with accessorial charges, layovers, detention, things like that, because they don't have their operation together. And so finding what your balance will be will then tell you who to target and make a phone call with. But then when you're making those phone calls, do you have the due diligence? Have you ran their credit? If you're going to be factoring them, or if you're not factoring them, you should still know that they're going to pay their bill. So you have to run a credit check on them either way. Have you done that before you made the call? Are they even worth your call? If their credit's terrible, do you want to be bothered with them? And that's where a lot of brokers I see that they've not identified their market. They haven't identified a niche. They've not identified a lane. They can't identify a rate. And the only time they do anything with their quoting is to undercut the next guy coming in line. And they think that that's the sales call. And then when they win it because they're the cheapest guy on the planet, then they find out they're having a terrible time trying to cover the lane. And it's like, well, yeah, because you didn't bother doing any actual research on what it would cost to do this. And they're just so happy to get business that they almost don't realize that the business is not worth the business. Like, it's not worth it. And carriers do the same thing every day. So I think it's, there's a lot of just, and there's a lot of brokers that don't know how to make the sales calls. Maybe they don't realize that sales is their job. but some of them kind of seem surprised by it.
Yeah.
So I don't know. I think to your point, I think there's a lot of, you need to be picking up the phone and sales calls and sales calls and sales calls. But at the same time, identify who you're talking to. You know, if you're making a call, Tim, just to make a call, just to put your golden star up on your board for the day and say, 51 calls, and like you're all pumped up because you made 51 calls. It's like, that's cool. But if 12 of those calls were really where the money was, what about those 12 calls is different than the remaining calls that you had that totaled to 51, right? What did those 12 calls possess in those calls that you didn't get with all these other calls? And how do we replicate those 12 calls? How do we get those 12 calls to be all 51 calls? And I think if you can identify those small things with clients that you're calling, maybe it's their structure, maybe it's their volume, maybe it's a certain level of monetary earnings they do, right? Maybe they have a certain level of earnings they do. And you found that every customer that does, 10 million plus annually has a mindset that's more akin and more aligned to what you want to do. Whereas all the customers that are doing, maybe sub 10 million a year or 5 million a year don't seem to really carry or value their movements the same way you would, or maybe that's not really your customer. And so, identifying those things, man, will help you define your own circle for yourself. And then, a lot of brokers have to know how to say no just as much as they say yes. And I think if you can do that, you'll make a killing. But a lot of people talk it really, really good. And then when they get on the phone, they just don't seem to care. It's like, oh, I got a deal. And it's like, yeah, but that's garbage. It's like, yeah, but it's my garbage. I want it. It's mine. It's free. Like, I got a garbage. And so, they almost don't know. And then it's, you kind of hear the horror stories about it afterward when you see their customers don't pay or when they get deducted $1 million because they did not do something they were supposed to do or didn't bother even put a contract together. So, I mean, I would say the statistic is funny to look at how many brokers have arrangements with shippers with no agreement whatsoever in place. It is quite staggering. And what people don't realize is that when they go after their collections on these people, it's not like a carrier going after a broker where there's a bond to go after. You go after a shipper, you're going to litigation. You're going to small claims court. It's going to happen. Like there's no convincing anybody else. And then it's your money versus their money. And if you're new in this business and you went about it, like a blazing saddle, just chasing everything and anything, you might find yourself in a precarious situation where you can't really collectively, cannot enforce on your collections, because if you do, you're going to go to litigation and they've got tenfold the money you do to argue it. And so, again, it's just about finding yourself, trying to keep yourself out of a bind before you put yourself into one. That's really the big key.
So kind of getting back to the factoring versus QuickPay.
Yeah, I was going to say, we dove off into that realm.
yeah, kind of took a left-hand turn there. So with all the double brokering and kind of the scams and things like this, it used to be kind of the norm where carriers had that QuickPay option pretty much from the word go. Are you seeing that that's not so much the case anymore? Like they're requiring lengths of time, so many loads that need to be kind of under their belt with that particular broker before they even offer QuickPay?
Yeah, brokers are getting more restrictive now than they've ever been. Not just in the terms of QuickPay, but even in the terms of who they'll work with. Some brokers used to have 6-month minimums are now pushing to a year. Some that had maybe a 30-day minimum or a 90-day minimum have now jumped to 6 months, where they're not going to work with a carrier that is below 6 months in age on their authority. They just won't be bothered. And some of them, they know their business, they know their criteria because they've got a good amount of credit and a good amount of volume. Those folks are pushing their time frames to a year or more. where a carrier needs to have that authority in check before they'll even talk to them. And then if they do talk to you, there's a good, strong likelihood they're probably not even going to offer you a quick pay. So what I've seen with, a lot of the double brokering situations is that the broker is paying the quick pay to the carrier. The carrier in a situation ends up being a double brokering situation where they've double brokered the freight down to somebody else and elected to get their quick pay so that they could get paid fast. And by the time the broker realizes that a double brokering situation is actually taken place, that carrier's long gone, has taken the money and run. Then it kind of comes to the broker, and the broker's going, well, it sucks that my stuff got double brokered, but my load did get moved. And I did pay this guy already. And so when the real carrier comes along that actually was the victim of it all, there's neither money nor time nor really any motivation on the broker's side to make that carrier whole because, well, frankly, he probably wasn't set up with them to begin with. And, in some cases, because of these age restrictions, you might find that the end carrier wouldn't have even been qualified to haul that broker's load to begin with because he's so new in his authority or her authority that the relationship would have never been established to begin with. And so it's, in those situations, a broker kind of feels bad that it happened, but they've already kicked out money and allocated funds out to this guy anyway. And so because it's been a quick pay and because this guy probably didn't come back to the brokerage for a day or two or three, there's no way to really retrieve the funds back. And, there's no incentive for the broker to pay twice just because somebody was a victim of a double broker, because essentially so was that broker. He was also a victim of the double brokering. And so, it's asking one victim to pay twice to cover up another victim. It's probably likely to not happen. So yeah, to the question of added in time or reducing the ability to quick pay, there's a lot of brokerages now that just don't even offer it because it's so notoriously associated with double brokering that they'd rather just not. If you can't take a 30-day net pay, and if you can't, or if you don't, want to go through a factoring company, how come? What's the reasoning why you can't go with a factoring company? What's in your past on the way you operate your business or have operated your life that would prevent you from going to a factoring company? Why is it though that contractual relationship with that factoring company makes you uncomfortable, but you double brokering or you getting a quick pay from a broker from a debtor that you really have not probably done any due diligence on? How come that's acceptable, but then you going to a factoring company who's going to do some underwriting on you also, and that's nerve-wracking. And so it's, there's a lot more to be said about that. So if folks are really pushing for a quick pay and your brokerage has a strong business credit and a strong volume of freight, I would not offer it at all. And if I did offer it, I would offer it at such an ungodly price that if you did have a margin in that as a double broker, I'm going to take it all back away from you, because I'm going to charge you just so much money that it's not going to be worth the time to do it.
Right. Yeah, I've seen some shippers actually, because of the cargo theft, hostage, and the double brokering, that oftentimes they'll ask you, who are you sending in? Like they'll request that MC number, and if their fleet size is 10 or less, they don't want you sending them in, because we saw a lot of that. It was a one truck, one driver operation, recently set up. But if for a broker, if you do your due diligence and you're vetting your carriers properly, you can see that they're operating from a virtual office, at Staples or something. They're just a double broker. They don't actually, there's probably just something rusting on a back lot somewhere that, so. But what kind of a role can factoring play in providing trucking companies with immediate access to working capital, and how does that differ from quick pay?
Yeah, so with a factoring company, you're going to have an entire portal that tracks your funding. You're going to be likely in some form of contractual arrangement with the factoring company. The factoring company will notify the debtors on your behalf that they're essentially paying you already, and that the funds need to be directed to the factoring company rather than directly to the carrier. From a carrier perspective, what it can do for them is it gives them access to running those credit checks that they're probably not doing. And then on top of that, there's a level of protection there automatically baked in, because when you're pulling that credit check, when the factoring company tells you yes or no, it's based off of a professional credit decision being made by a professional interpreting the data. If you can pull a credit report, that's wonderful, but you just going off the fact that they have a high credit score does nothing for you if their paydex score is terrible. If they don't pay their bill, well, I mean, it doesn't matter that they might have good credit if their pay terms are horrendous, or there could be no pay information whatsoever. And if you've pulled a credit report and you're not a knowledgeable expert at reading that credit report and interpreting the data for what it actually means to you and what the exposure risk level is based on that, you could be misinterpreting an entire piece of credit and saying, well, they look like they're great on paper. Well, that may or may not be the case. When you have a factoring company whose job it is to underwrite and review these credit decisions on a daily basis, that's what their living is based on, is literally a factoring company is doing nothing but lending you money on a short term with the intention of collecting the funds back. So they're a professional at doing these things and ensuring that when they lend money or pay out early on an invoice, they're a professional in making sure they're going to get their money back. So you can assume that just by working with them, the debtor they're normally approving to be working with, they've probably got a pretty strong chance that that person's going to pay their bill. Now, there are some levels of responsibility there. So if for example, the debtor in this, whether that's a direct customer or a broker or whoever that's giving the load down, if they don't pay the bill, there is some reassurance for the factoring company that the responsibility then goes off on the client in most cases. But where it differs is, number one, it's consistently the same rate. You've got the same cost of getting your funding regardless of who you're working with. That's a big benefit. Then you're getting the credit checks on top of it. From a broker's perspective, when a broker is doing the factoring is handling the carrier payables on your behalf, which cuts out a lot of the headache for you. It cuts out a lot of the unnecessary, I didn't get paid questions that come from carriers, or it will also eliminate the false reporting on your credit that could be happening as a result of missed time payments. So if you paid at 31 days and you just happen to be a day late doing that, well, that can negatively, and adversely affect your credit report. So it's like having somebody there that's doing it before automatically for you, and is also what they're doing is providing a credit check on the customer you're getting ready to go work with, which is a complete unknown to the broker. And again, that professional credit reporting and reading and deciphering of the data, that's exactly what a factoring company is doing. When you're doing a quick pay with a carrier, as a broker giving the money down to them, you're not getting any benefit of the credit reporting at all. So the transactions happen so quickly that no one can pick it up. So you got a load from your customer on, say, Monday. It's going to ship on Wednesday. It ships on Wednesday. Its planned delivery is Thursday. You booked the truck on Wednesday or Tuesday night, Tuesday afternoon for Wednesday pickup. Truck comes in, picks it up, delivers Friday. They've elected to be paid quick pay. You pay them Friday. They get funds received by Saturday morning. None of that, that all happens within a week. So nothing is being tracked from a credit perspective, because there's never been a crossing of the balance line where it's shown on the next month as a balance, and then the next month shown as it's paid off and the balance is coming. And so because those things are happening so quickly, there's no benefit to the broker's credit at all to do that. So quick paying from a broker's perspective doesn't benefit them any. And then as a carrier getting quick pay from the broker or from the customer, you're doing this with the reliance upon the fact that the person you're working with is vetted and is honorable and is going to pay their bill. That also is an unknown to you if you're not using some form of credit check. So you could essentially be signing yourself to do expedited payment. But if the person you've set up to do expedited payment with is a complete fake, then
They sounded nice on the phone, though.
Oh yeah, I mean, they all do. And then, so then you get set up with that. And then when it comes for you to get quick pay, you're just not going to. And the other thing with a broker is that the quick pays are not all the same. So some quick pays might be 3 to 5 days quick pay. Some might be a tiered structure where you can get your money in 10 days for this rate, 5 days for this rate, 1 day for this rate. And so they might, tier it up where it's more expensive the faster you get your money. And again, factoring just provides you that consistency, right? So you're getting your funds next day as long as you submit it in by this time. It's going to cost you this much money of your total. You know how the funds work. You know how the fees work. You know how the structure works. And as long as you're following the credit decisions and guidance of the factoring companies you're working with, they're doing these things and making these judgment calls based on a combination of data to make that decision. And factoring companies also have an association. So a lot of factoring companies, if they're a part of the IFA, for example, the International Factoring Association, those individuals are all getting together and talking about the same debtors out there in the market. And so if there are particular bad brokerages or bad customers that don't pay their bill, the IFA gets all these people together to discuss these things, so that if there's a denial from one, there's likely to be a denial from all, because they're all seeing the same bad signs with them, and they're all talking about it amongst themselves to not necessarily shape the market, but they're shaping they're essentially using each other as shields to protect one another, to make sure that, hey, did you know about this guy over here not paying his bill? No, I didn't even know about that. Yeah, they haven't paid us in months, and they're saying that their systems are going down. Well, great. I need to know that so that in my system, I can make sure that we're not giving ourselves the same exposure that they just got. And so there's a real willingness to work amongst each other there, because they're all trying to protect their cash. And so that in and of itself, the level of protection there and the likelihood of the people paying their bill is very high working with factoring, as opposed to if you were to follow their guidance, as opposed to you just going out and getting quick pay. And so, yeah, if you go out to get quick pay, you're in an unknown situation. You could say, well, this quick pay is coming from TQL. They're huge. They're not going out of business. I can rely on them. They're going to pay me quickly, whatever. And it's like, dude, we've seen this stuff happen before, where a massive conglomerate goes out of business overnight. And if you did not see any of the red flags coming up to that point, there could have been a very big reason why the factoring company you were with just told you no, maybe because they know that information. And so if you ignore that and you don't rely on it, sure, you can go get a quick pay, but you're basically taking your own risk in full at that point. So, from a factoring perspective, where it benefits you is the fact that, number one, if you have been keeping hundreds of thousands of dollars on hand to support a multi-truck operation, and you're keeping the cash around, your cash is losing value on inflation every single day anyway. So why not free up your cash, have a consistent cost of doing business, which is relative to the cost of inflation anyway, because all the factoring companies are backed by banks anyhow. And then rather than your cash just sitting around in an account to be used, why not utilize it for marketing? Why not utilize it for growth? Why not utilize it for another truck acquisition, or utilize it for more of a sales bonus incentive for guys to go find more work for you, right? Could you take 30 grand and make it a bonusable event for your sales staff to hit different metrics and different achievement levels? If you can utilize your cash in different methods to grow your business, that's not just sitting around waiting to be spent on a fuel bill, that you're doing way more with your cash. It's going a lot further. And so there could be a lot of different reasons why somebody would go to factoring. Certainly from a cost perspective, it can be beneficial, but it's one of those things that if you're not using factoring for the credit check capability, and if you think you're going to interpret the data and rely on that, maybe you come from a background in that field, and so maybe it doesn't make sense. But for the mass majority of people that go out there, factoring makes a hell of a lot of sense, especially for brokers, because you guys are paying so much money in cash out. especially as a new broker with no credit, you pay so much money to carriers on quick pays just to try to cover your customer freight and not ruin the relationship. And so it's like, the carrier doesn't want to work with you because you got no credit. And so what do? Well, we could quick pay. We could quick pay. It's like, yeah, you're going to cover the freight for your customer, but you benefit nothing. Your credit's still crap. And now this guy who could be a double broker got paid even faster. So I paid him rapidly. I could still lose the customer, but I'm covering their freight. So hopefully I don't. But then I didn't build my credit. So now I'm still in the same boat on the next go round. And at the end, the cycle just repeats and it repeats and it repeats. It's just wash, rinse, and repeat. There's nothing changing. And then, you'll see a broker come to you. I've had brokers come to us that have come to us after like 6-7 months of trying to build credit. And they're like, dude, I don't know what we're doing. Like, we're not getting there. What are we doing wrong? And you look at it and you're like, well, dude, you're spending this much cash and just carrier quick pay. Like, why don't you get away from that? And they're like, well, if I get away from it, the carrier won't work with me. It's like, okay, well, we have some ways to combat that. And we can help you mitigate that. But where you're going right now, there's no way to mitigate it. You're going to you're going to have this constant repeat cycle. So yeah, I think factoring is beneficial to everybody. Really do.
Right. Yeah, it's definitely a great way of getting your payments recorded and establishing your credit for sure. Because that quick pay is just a pitfall.
Yeah, yeah, it certainly is.
So how do you believe the choice between quick pay and factoring can impact the long-term financial health and competitiveness of a trucking company?
Do you want me to include brokers on that, or do you want to just do trucking?
That's up to you.
Well, let's put it this way. From a broker perspective, let's take the broker right off front, because a broker is the easiest one to benefit from it. Imagine you're working with a customer and the customer does $15,000 a month with you. Okay. And you've been given that credit line by the factoring company. Let's say you're factoring with factoring company and you were given that credit line at $15K. Now, let's say you're in a bad position where you're trying to build your credit, but you haven't been building your credit at all because you've been quick paying your carriers. You're quick paying your carriers at 15 grand. That could cost you a lot of money. So a broker that's doing this on his own with no factoring is quick paying the carriers at 15 grand worth of freight that's coming out monthly with this particular customer. The question then begs is, what happens when the customer comes to you and says, hey, Tim, you're doing a kick-ass job at 15K. I want to bump this to 150K a month with you. Let's get going. You're going to look at it and go, holy crap, I'm expending this much cash of my own money paying these carriers right now at 15K a month. How the hell am I going to cover you at 150K a month? They're not. You're going to you would have to have so much cash on hand to try to cover up that volume of freight that you're in the same boat as a carrier who doesn't factor. You've got all this cash on hand to pay all these carriers that benefits you none, to build no credit. And now you've got all this cash expended. So when the customer comes to that broker and wants more freight, more volume moved with that customer or with that broker, because let's say the 2024 starts looking good. Maybe the guy starts doing great sales, right? Everybody's feeling motivated. It's an election year. They're doing all their things. They're all pumped up and freight starts moving. That guy that's funding this operation out of his own pocket is going to get tapped real quick. And the guy that's got the funding and the backing of the factoring company that can just drop at the hat can go get you, like, for example, I had a broker that approached me, had $1 million project moving over the course of 60 days, needs cash right now. Now that broker can come up with 500,000 to 700,000 of their own cash. So they could do a lot of it of their own. They really only probably needed about 200 or 300. And they were like, well, I can utilize my own cash. I don't know if I want to pay for the factoring just yet. And I said, yeah, but don't you have another bid in for 7 million right now? And they're like, well, yeah. And I'm like, what happens then? Well, yeah, I would need funding. It's like, hello, yeah, you need to have a relationship built by then. And if you're a newer broker, which this one was, a newer broker who happened just every card that could have imagined falling in their lap fell in their lap. Great customers, already had previous relationships with them, had worked with them in different industries and wasn't a broker at that time. they have, they don't have, the broker has no credit. The customer has really no credit because they've all been using a debt-free mindset where they're paying their cash and paying payments fairly quickly. The customer is going to pay them in 60 days. This broker is going to move, $1 million+ worth of freight with this person who's going to pay them in 60 days. And they don't have enough cash to even pay on this one. And they're coming to be worried more about the cost of me funding them as a factoring company than they are the fact that they've got another $7 million quote sitting over here that could get approved. And if it gets approved, now they're on the hook for $7 million and they have no credit. They're a brand new broker. Like who's going to fund you on this? And so from a factoring perspective, long-term, that's huge. You went from $1 million or from no money as a brand new broker to doing $7 million plus contracts because you found funding. That's incredible. From a carrier side, same thing. You cannot be a one-man operation and sit there as a one-man operation and expect to find incentives, discounts, and bargains. None of those bargains are attainable to you as a one-truck operation. Zero. None. So when you look at it as a one-truck operation, you have no leverage with anyone. You're doing about 25 to maybe 30,000 a month in revenue, which equates to roughly doing about 240 to 280,000 a year in revenue, which then we all know operates off a 2 to 6.25 net profit margin. So you're probably looking at making out of the couple $100,000 you do, maybe you'll see 40,000 in net profit if you're lucky. And then, you're doing this on your own, and then you've got to hire, you've got to bring in another truck, down payment for more equipment, get in more fuel. More credit for this, more credit for that, like without funding at some point, without a loan at some point, you're not growing. You're going to be stagnant. And so it's like, is taking on the factoring company and paying the little bit of expense you're paying to get your money expedited to you, which allows you to fund these things, is that cost that concerning? That the long projected growth that you're going to get won't exceed the cost. Like if your cost is if 2%, 3% scare you today, but that means that you not doing 2-3% over here, you're losing 75% growth over there. Like wake up. A 2%, 3% cost is nothing if I get 75 to 100% growth. If I can get 300% growth, 400% growth, because I'm freeing up $100,000 in cash to now use to buy additional equipment or to make those additional purchases on equipment or to buy another truck or to hire another driver. It's like you're essentially using your cash to keep it in a bank, let it lose value to inflation, and then pay on bills that you had to pay anyway, just to operate your current operation. And so you can see that automatically over months and months and months, the cash you keep on hand is losing value, which means it costs you more just to stay in business. And so why would you keep your own cash? Why not leverage yourself a little bit and know that the factoring company is buying your invoices, that they're giving you credit decisions on quality brokers and quality debtors to work with, that you're getting your funds rapidly, and you can depend on those funds coming into you so long as you find and are working inside the network of what they are deeming as a protective, hey, these guys are quality people. As long as you work inside that bubble, and which is, again, reducing your risk, which should be calculated in as a win, because it's like, dude, if I'm reducing my risk, I'm keeping my cash safe, which means that's valuable to me. Because if I lose this and I start hauling all these loads, let's say I have 3 trucks and I haul even 3 double brokered loads. I have the loss in revenue. I have a loss in fuel. I paid for the insurance. I just paid the driver. Like I've got all these expenses and now I'm not getting paid. You do that 3 or 4 times, your business is out of business no matter what, especially on size. If you're small enough initially, that could be crippling. So, for your long-term and short-term projections, long-term, ultimately, you get away from factoring, right? That's the long-term projection. For a broker especially, long-term, you're probably away from factoring. You're balancing the receivables with your payables, and you're using very little cash flow in between to manage that operation. But that's requiring your credit to be strong, plus your revenue to be strong, which, your volume and your credit are so strong that you can get away with doing that, and it all makes sense. But without developing those things, you're essentially just shooting in the dark. And a factoring company can also help you with the conversations of, like, in our example, we're going to give you a letter that says, hey, Tim, when that carrier comes at you and says, hey, man, you don't have any credit, I need to get a quick pay, you can present them a letter that says, listen, these funds are guaranteed. They're backed by banks. We're 100% insured here. Your funds are guaranteed to you. I don't quick pay. Here's why, because my funds are guaranteed. If you would like to get your funds sooner, you have the option to go to a factoring company on your own. So if you're not doing that, I'm sorry you're not doing that, but I'm not going to lose the building of my credit when I have guaranteed funds here because you're upset that you don't, and you got something that prevents you from factoring, or you don't want to pay the cost. So now you're making, you're willing to do it with me. Like, I'm not going to take the hit. I don't want the hit. Because essentially a broker quick paying you is a favor. That's a favor to the carrier. That's really what that is. That's a good old boy pat on the back. Thanks for participating. This is what you wanted. I'm trying to serve you a little bit better, that kind of thing. But to do that every time and not build your credit as a brokerage, no, it makes no sense. You have a business to maintain. And if a carrier was thinking correctly, it actually makes sense for them too. They want to be invoicing in 30 days. They want their payments reported. They want their things reported. Could you imagine if your electricity company, your internet company, imagine your internet company called up a carrier and said, listen, your bill's $197, but we'll do it for $100. We'll give you, we'll discount you to $190 if you pay us right now. Like, are you going to pay your bill early? No. Not for a $7 savings. You're going to pay them in 30 days when they're due in 30 days. You're going to say, hey, dude, call me on the due date. Get out of my face. If we do that as people with our own bills, why are we not doing that in business? I don't understand that. It's like you don't ever do that in business. And if you're going to do it in business, if you're going to get paid quicker by a factoring company, that's one thing. But, why is you as a carrier or you as a broker would reduce your own credit building process to just give somebody their money faster who's probably double brokering you to begin with? It doesn't make a whole lot of sense to me. So I would advise against it.
Right. I've held you up for almost an hour, or about an hour now. I'll ask you one last question here for everybody. What advice would you give to a trucking company currently navigating the decision between QuickPay and factoring, more or less to optimize their financial strategy?
Yeah. So, if you're in a position where your credit is strong, your business credit is strong, not your personal credit, your business credit is strong, and your cash on hand is strong, you may not need to factor. I would say that if you have a really solid credit checking process in place already, that you have trusted, educated, trained individuals to read that credit process for you, and you're confident in their abilities, then yeah, factoring may not be a necessity for you. But if you don't, or you have the slightest doubt about yourself or your credit checking ability, or just who you might be working with or coming across in the next 5 to 10 years, I would highly suggest you consider factoring. And when you're evaluating the cost, not all factoring companies are the same. There's going to be differences with setup fees. For example, brokerages right now, a new brokerage without very minimum, who doesn't have a solid carrier base, or customer base, and doesn't have solid revenues, you might find it very hard to work with a lot of factoring companies because they don't want to be bothered dealing with you. They know it takes you forever to find a customer. They know it takes you forever to fund on it. Then you got to find a carrier. So a lot of factoring companies don't want to be bothered. Operfi is a little different. We'll work with you regardless of what your minimums are. We don't care about the minimums. We're there to essentially take you from where you are today and build you. And we understand that there's a need for that. So we've kind of tailored ourselves in the marketplace to assist these folks in that realm. But if you're on the fence between factoring and not factoring, you need to consider the growth potential. And you need to consider the protections you're gaining by having a qualified network. Let's say you're getting ready to grow and you've been dispatching yourself for the longest time. Putting factoring in place will then allow you to hire a lesser trained person, come in, put them in front of their computer, give them give them your factoring portal, right? Give them access to the portal, tell them and teach them how that you want them to do the credit checks, and let them know, okay, boom, you're going to do a credit check. When you see this, we're good to book that load. If we don't have this, we're not good to book the load. You can train staff simply, timely, easily, with just giving them the portal and saying, here's what the steps of the procedures are. We credit check first, then we do this, then we do this, then we do this. 1 through 5, 1 through 10, whatever. But you've got a checklist now that they can follow, and you've got comfort and security knowing that the credit experts at the factoring company you're working with have made and rendered decisions of credit worthiness to the potential debtors you might be working for. And they are there protecting your business from making a mistake or working with somebody that's not going to pay their bill. And that in and of itself will allow you to grow your business a little more worry-free than to just kind of be trying to train somebody on how to interpret the data for themselves, because you have to think that far into it. If I hire a dispatcher today for $12 an hour, $15 an hour, does that person know how to read this credit report at the level I do? Can they make a decision between, like, borderline decisions where you got somebody that's got a 78 credit score where they're not great, but they're not crazy terrible, but their raw volumes are good and their paydex is fair? How do they render that decision? And there's so many complexities behind trying to render those decisions that it doesn't make sense to try to train an individual to do it. Because if you look at the turnover we have in our industry, by the time you've got them trained, they're gone. They went somewhere else. And they took their newly founded skill set with them. So you just wasted, again, time and money training staff. So I think from a perspective of any business that's looking to grow, where you're not, I would say, unless you're doing, I'd say unless you're doing probably closer to like 2.5, 3 million a year or more on the broker side, you should be doing that. And unless you've got a whole trained staff and you're set up completely for direct billing, collections, follow-ups, the phone calls, the staffing, the hourly wages, all that has been worked in. If you think about it, factoring is essentially all of that. They're an entire collection department on your behalf. They're an entire invoicing department on your behalf. So how much would you pay a person to go collect for you right now? How much an hour? How many hours a week? How much? What do you pay them when you don't have to collect? Because in factoring, you don't. But in real life, you would. You're not going to hire somebody and say, well, Marcy, you just come in whenever I tell you to. With an unplanned schedule and an unplanned amount of time and an unplanned amount of earned income, here's how much you're going to do, So you're essentially replacing 5 or 6 critical people that you need in a business by putting in a factoring company in instead. And when folks look at their cost, you got to look at it. That's a real reduced amount of headache, comparatively speaking. I was able to run a several $1 million trucking company with myself and one other individual because we were utilizing factoring for our billing department. And I had a portal that I could check, and I knew how to interpret the data. And between myself and their team on that factoring company, I was able to successfully run, bill, invoice, and account for all of my costs of revenue. And I was able to hire in drivers a lot more carefree and able to do it on much more of a rapid pace than I would have if I didn't do it otherwise. And my exposure was also limited. And I was able to train my staff. So we didn't pull a load where we didn't run a credit check. We didn't pull a load where that was outside of our network. And actually, we found ourselves as we grew getting more restrictive than even our factoring company was. We knew there were brokers we could work with that our factoring company would approve. We just didn't bother working with them because we didn't like them, or we didn't like the way they did something, or we didn't like their agreement that the broker had. And so we were like, look, I'm not going to waive my rights to CarMac to work with you. Forget that. So even though they're approved, we're not bothering with them. And so from a benefit perspective for factoring, you will never find an industry where you're going to get a 97% advance rate. Never. Okay. Construction might get a 40% advance rate, 60% advance rates. Oil and gas is like 40% advance rate. Like, you're not going to find 97% advance rates, 98% advance rates in any other industry. It's only in the trucking world where financial folks hear this for the first time that folks are actually upset when they got advanced 98% of their money early. Like, who complains at 98% advance rates? Like, even at 90% advance rate, who's complaining? You're getting advanced 90% of your money? That's insane. Especially as volatile as our market is, as volatile as the fraud, and as high up on the list as fraud as we have in this industry. Like, dude, the amount of risk is insane for you to still be getting a 98% advance rate or a 97% advance rate or 90% advance rates. It's insane. So I think you should take advantage of it while it's there, because I don't see factoring getting less restrictive going forward. I do see them getting more restrictive, getting more intensive, and more selective. As factoring companies get burned all the time. And so I really don't see them getting any more lenient. And I think if you can take advantage of the cheaper rates right now that they're out there, even at 3%, 3.5%, even 4%, it's a fairly cheap rate comparatively to any other industry. So from benefits, my advice with you, if you're on the fence, go with factoring. You got no reason not to. Read your agreement. Make sure the agreement you're signing is not a complete joke. Make sure that you see the language, ask for the terms, review the hidden language in there. How do I get out of this agreement? Is there an early termination fee? If so, what is it? How's it calculated? Where are my sticking points? Where is the prevention of me leaving this contract if I wanted to? And if they've got a fair agreement that allows you to leave with a relatively low cost, and or you could leave for free if you give a proper term notice, and they have a good ethical, moral position on how they handle their business on a day-to-day basis, and you feel confident talking to them and comfortable, go with it. And I think you're smart for doing it. And then once you do it, for the love of God, don't hire a factoring company and not follow them. Like, everybody I've done bond filing help for, which, by the way, we do all the time. You can type in bond filing help into Google and it'll pull Operfi up. We help people file on bonds every day. Every one of them, for the most part, I mean, I would say 98%, the majority of them, I got a factoring company. I just didn't bother using them on this one, and I went with this one anyway, and it burned me. Like, dude, yeah, no kidding. Like, what was the whole point of hiring the factoring company? Like, you hired them just to disregard them and go get burned anyway? Like, think. Right. So it's just one of those things that I'm like, man, like, if you're going to use the factoring company, please, for the love of God, just use them. Just use them. It's not hard. Just protect yourself. Try to. Common sense, right? Well, yeah, you know, I don't know, Tim, anymore. It's so uncommon now that it's like a jewel in a box. Yeah.
Oh, I have always been a fan of Operfi. You guys, I mean, between the boot camp, the real world industry knowledge versus what, you know, some other desk jockey that fresh out of college, you know what I mean, that doesn't know the real world of our industry and everything. I mean, I can't say enough. I'm always bragging you guys up. It's like, I know. Every time I see you on here, it's huh? I say every time I see you, I'm like, oh, Tim's at it again, man. I try to tell everybody about Operfi. I really do. Every phone call, every email, you know. But and obviously a huge fan of your show. I mean, just a wealth of knowledge. I always try to tune in whenever I can. There's sometimes I'll miss it. It'll say that you were just live, and I'm like, oh, I just missed them. But yeah, I gotta work on all that. But I'm just trying to expose stuff that's going to help people, man. I mean, and when I give people advice, just so people are aware, by the time I got to my new insurance audit, which happens every, your first year, by the time I got to that point for the new insurance audit,
we were at the point where we had almost crushed $2 million. We had several of our own trucks, you know what I mean? And we had already created our own freight brokerage at the latter half of that year. And that was all inside the first year. But it was utilizing, for people that get into trucking and stay a one truck operation for the entire time they're in, they don't ever grow. I mean, there are those guys that just want to be left alone and do it for themselves. And for those guys, hey, no more power to you. Do what you want. But if you come into this industry to grow, to find benefits, to find incentives, you need to grow. You're not going to get those incentives unless you grow. People are going to take you more seriously when they know, especially Tim, let me ask you. I mean, if I called you up as a 12 truck carrier or a 15 truck carrier, and I call you up to pull one of your loads, is the assurance on your side more or less? Are you more comfortable or less comfortable working with that outfit as opposed to a one guy who's got one truck and his authority's, 93 days old?
Hands down, more comfortable.
Yeah. And so it's like, dude, if you're going to grow this business, as you grow it, there's so many things that truck drivers find out later on in life as they've grown a business that you will not know if you're just running a one truck operation. You won't get to imagine it. How many cargo claims do you think a one truck operation experiences? Very little, because they're one truck. The chances and the statistics go down with a singular truck. But with multiple trucks, the risk is increased. The likelihood of you experience it is more. So yes, the money goes up, so comes more problems, right? The old adage, more money, more problems, but comes also more experience. So I can tell folks, generally speaking, even from the job I do to this day with Operfi, I wouldn't be in the connections I am, or have the friends I have in the industry, or talk to the people I talk to now and be in those circles if I didn't grow the businesses, if I didn't do these things to better myself in the businesses. They allowed me to meet people at higher levels who had more impact and help on my businesses than I did at the lower rung tiers, where I didn't get to speak to those people because I was a one truck nobody that was calling in. And so there's so many added benefits to growing a business in this industry and legitimately doing it, whether that's slow or rapid, but just growing in general, that it long term will benefit you in so many. I mean, you're going to get a reduction in insurance, a reduction on fuel costs, you get a reduction on factoring rates, you get a reduction in discounts with other people. People will start giving you net 30 terms at repair facilities, where rather than you paying for that oil change the second you leave, you can now be on a billing cycle with them. You've got a vendor now that's going to do this for you, and you're on a term with them. That allows you to keep your equipment on the road, helps you to earn the money you need to continue covering those costs and keep your trucks rapidly moving without the driver themselves having to pay for things. It's such a benefit to growing the businesses. And if you can do that by utilizing factoring to cover up on the costs that you're going to experience right now of just running a one truck operation if you're not factoring, that the benefits are just painstakingly awesome. And with all these channels, your channel, my channel, all of this is giving people so much information to use to their benefit, that for someone to come in and say, well, I don't know how to do this, get out of here. Like that might have been 8 years ago, 10 years ago, where the internet wasn't as prominent as it is with all this guru discussion. But what you do have to wade through is a lot of misinformation. But when they find channels like yours and mine and everybody, like that's where the whole point of these raw, real, unfiltered channels, that's why they're there, is to give you the actual insights you need to make educated decisions on realistic information and not be misguided, and hopefully benefit yourself to grow and then reap even further benefits as you grow. So that's the long-term plan for all these channels and all the stuff we're doing, even our discussions. Like, that's the long-term goal is for these folks. It's not because it really benefits me or benefits you necessarily, but it's, can we better the industry? Can we make the industry more comprehensive as a whole? And can we help these guys get more educated so that they're not falling in these pitfalls, and so that we're reducing the fraudulent activity and the nonsense and the BS that's out there? Can we do a reduction in some way? And can we maintain an optimistic view for the future? And I think that that's where, at least for me, that's where my perspective is. I think that's where you go with a lot of yours is just from genuine help. You're trying to help. And I think that people should really pay attention to your channel just as much as they would ever mine or anybody else's. I mean, if you find good people and good information, you stick with them and you follow them, because those people will probably not misguide you. That's great.
Right. Yeah. Again, I can't thank you enough for coming on. For those of you out there, if you haven't already, visit Hauling Cash, like, share, subscribe, hit that bell notification so that you know when Danny does his videos. Again, just a tremendous wealth of knowledge over there, a lot of industry insight and things. I'm still learning, right? That's why I'm constantly, checking out your new videos every time you put one out. I'm just absorbing all of that. So, again, I can't say enough. If you found this video helpful, if you need factoring, if you're looking to switch from your current factoring company or anything, visit Operfi.com. You can get a hold of Danny. You can get a hold of me. We'll make it happen for you, right?
Yeah, absolutely.
So,
let them know Tim sent you.
Yeah. Yep. With that, I'll let everybody get on with the rest of their day, and we'll see y'all next time.
Bye, guys. Thanks for watching. Thanks, Tim, for having us on.
Yep. Absolutely. Thank you.